Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O
and we are so lucky, we're so blessed to have one of the top mortgage lenders in the state of California, Jackie Barikhan. Good afternoon. I got it right. Good afternoon, Jackie.
How are you? Good to see you, Steve.
Jackie's
so when are rates going to go down? Boy, I wish I had my crystal ball, but
you don't know? Jackie, come on.
We pay for some of the best data. We have some of the greatest people that send us text messages and emails all day long. And they're saying it's probably going to be about a year or so. So we'll see.
Wow.
We'll see what happens.
That is, they keep
going to get worse before it gets better. That's what I'm hearing. So we're supposed to be getting a couple more rate hikes. And then eventually it should be coming down after that. So we'll see what happens.
What has that done to home sales?
I think it depends. Home sales are very subjective to market. You know what I mean? Here in Orange County and up in LA and down in San Diego, which are our main markets, we're still staying busy. There's just not a lot of inventory. That's part of the problem too. I mean, obviously the price of interest rates being so much higher has affected some people's ability to purchase. So it's a little tougher for some, but there's still opportunities. There's always opportunities if you stay positive, right? Work hard. That's what we try to do.
It's not your fault. The rates are not your fault, Jackie.
Definitely not. Definitely not. I will say I was nice when we got to sell our 2% rates, a year and a half ago. The lowest rate that I ever was able to get a client was like a 1.75 or something like that. It was for a veteran, and that was nice.
Wow.
When we can do those kind of things. I hope he never refinances.
Jackie, tell everybody about Summit Lending.
Summit Lending, my lender Jackie is my website, and we do all different kinds of home loans, from the conventional loans that are typical, that where you're using 2 years of tax returns and W-2s and pay stubs if you have a consistent job. We also are specialists. We really emphasize on the loans called a non-qualified mortgage, which is mortgage loans that are a little outside the box. So common sense thinking comes into play. And those types of loans are what we've discussed in the past, where we talked about bank statement loans for people that own their own businesses. So rather than looking at tax returns, we can look at the bank statements to show their income. We also have our cash flow program, which is a program for investors, property investors, where the only income qualifier is for the rent of that property specifically. And that's it. So that's a pretty cool program. And then we have some other programs called the no-doc loan. And that one is the one I think you might want to know a little more about today.
Well, I got to tell you, what I want to know about is here in Florida, we are being blasted like crazy from mortgage companies going no credit, bad credit, brand new on the job. I mean, every possible thing you can think of will get you approved. Do you have the same thing in California?
We have a no-doc product. We do have a no-doc product, and the no-doc product is a little more creative than most because there's no proof of income requirements. But FICO score is important. Down payment is important. Reserves are important. And if you put all those together, it's a very simple program, and it definitely helps certain types of clientele.
Well, I was going to say, if we allow this to happen again, because this happened once before, people getting approved that should not have probably been approved, we're going to be a mess again. But I'll let that again,
Steve. I don't think we're going to have that again, because these types of loans, even though income isn't part of the equation, FICO is very important. Down payment is very important. You got to have skin in the game, and you got to have reserves to be able to do a no-doc loan. So even though it sounds like the stated income loans from 2008 and before, it's a different animal because it's credit driven, it's down payment driven. Back in 2008, we had a lot of the 100% financing, no money down, 580 credit scores. You could buy a house with no money down, and you didn't have to have very good credit. You could use stated income, which is that was very professional.
So that'll never happen.
That is not going to happen again. Yeah, not in our lifetime, probably. So,
well, let's get into educating our listeners and viewers, and I'm going to start off on some easy things. What is the main difference between a traditional mortgage loan and a no-doc, which you just brought up, mortgage loan?
Okay, so traditional mortgage loans are, if you've had your typical job for a long time and you get W-2s and you get pay stubs and you can show 2 years of tax returns, that's going to be a great loan for you. Conventional loans, FHA loans, VA loans, they all fit into that category. The no-doc loan is part of the non-qualified mortgage category, which is a loan that basically is just looking at FICO, it's looking at down payment, and it's looking at reserves. So it's a much simpler process because there is no job history, there is no income that's being used to qualify for debt to income ratio. So it's a simpler product, and there's certain types of clientele that would want to use this type of loan.
Are there any specific, industries or professions that are more likely to choose to do a no-doc mortgage loan?
Okay, here we go. So yes, absolutely. If you're self-employed, you own a business, you're in an all cash industry. We've got, restaurants. We've done loans for people in the cannabis industry. We've done loans for, real estate investors. We had a client that had 17 LLCs and over 200 different properties. Change of life situations. I've got ladies who were recently divorced and they got a nice settlement, but they've never worked before. They don't have any job history, but they have money for a down payment and they've got money to be able to make payments with. This loan would be perfect for them. So there are certain types of clientele that are perfect for the no-doc situation.
So what kind of factors do lenders consider when they're evaluating these eligibilities?
Okay, very good.
And how do they decide how do you decide what is the best loan for them?
That's a really good question. So, when anybody calls us that wants to get a home loan, of course, we're talking to them, we're interviewing them, we're looking at their situation. And depending on what we hear when we have our conversation, we can determine if we think they're going to be a good candidate for a conventional loan. So we would want to look at their tax returns and their W-2s and their pay stubs. And that might be the best thing for them. That's going to have the lowest interest rate, and that's going to be the best product for them if that's what they can show. But there's a lot of times when we get into the conversation and we find out that they're self-employed and a lot of the money that they earn is in cash and it doesn't get deposited in the bank, and all sorts of stories. Everybody has their own personal story, and there's no, not a problem with that. The point is, we're going to determine as we talk to you which program is going to be the best one for you. And we just happen to be specialists at doing the non-QM stuff, which is, bank statement loans, no-doc loans, cash flow loans. So, every loan looks at basically the 4 C's of credit, if you will. Okay. So number 1 is your character, right? Or your credit. How well have you paid back other people? And that's determined by, the type of trade lines that you have on your credit, what your credit score looks like. Do you have a 750 credit score? Or do you have a 650 or a 550? Those things tell us a lot when we look at that credit score. We look at, normally on a full doc loan or on a bank statement loan, we look at your capacity, which is your income. So we can look at income a few different ways though. So we can look at it with tax returns. We can look at it bank statements. On a cash flow loan, we can look at the income of the property itself with the amount of income that it's coming in as a rental for cash flow. The capital, that's the third C, which is your skin in the game, right? And that's very important. So back in 2008, you could buy a house with no money down. Nowadays, everybody needs a down payment. So if it's conventional loan, you can do 3% down, 5% down. On a bank statement loan, we're probably looking at 10% down. On a no-doc loan, we need like 20% down. So skin in the game, and your capital is very important. And then we also are looking at reserves. Reserves are something that shows how much money do you have left over after you made your down payment and paid your closing costs. Do you still have a little bit of funds left away on the side there in a bank account? So something happens to you, are you going to be able to make your mortgage payment? So that's very important. And then the third C is collateral, which is the property itself. So what the condition of the property, how many bedrooms and bathrooms, where is it located? Is it on the beach or in the town, or is it on 10 acres, or is it a single family residence or a condo? So those are the basics. For a no doc loan, all that would apply, except for you would just take out your capacity or the income piece. So we're going to look at everything else, but we don't look at the income. Income is not part of the equation.
How long does it take to get a loan approved?
We close these no-doc loans in about 20 days, top to bottom, start to finish.
Okay. That's not bad at all.
No.
And let's talk about interest rates now and terms. How do interest rates and terms for these no-doc mortgages compared to, say, the traditional mortgage loans?
So you can imagine where an investor, the hedge funds, the insurance companies, the Wall Street guys that are buying these types of loans, they look at a risk reward basis. So obviously, if we're not proving income, it's a little riskier proposition, not as risky as the no doc, stated income, no money down kind of thing, but it is a little riskier. So for that amount of extra risk, they're going to look for a little bit more interest rate, but it's not like hard money. So, I would say traditionally, currently we're in like about a 7% interest rate environment for full doc, for if you showed me your tax returns. If you did a bank statement loan, those interest rates would be pretty similar, 7s and 8s probably, so about a point or so above the market. The no doc product is probably another point above that. So probably 8s and 9s right now. So better than hard money. Hard money is like 10, 11, 12, right? So
yeah. Hey, no more 3% interest rates, huh?
Not right now. Not right now. Hopefully it'll come back. We'll see in a year.
It will. It will. It always does. Let's talk about specific situations where a no-doc loan may be more advantageous for a borrower.
Okay. So I've got some great stories. I could tell you
Love
that.
stories.
I know stories are the best, right? We love our stories. We've had so many different types of clients that we've worked with over the years. Having been in the industry for almost 30 years, we work with, all kinds. So our all cash customers, again, certain types of industries where you get paid a lot of cash or you just can't document it or whatever. That's where this program is. That's the sweet spot for this program. Okay. So there's restaurant owners, there's, like I said, the cannabis industry, recent divorces. We had a guy that he was selling those beautiful high-end tennis shoes, and he was selling them online and didn't really have the bank statements to show that, but he was making plenty of money and he had a big down payment and he had a nice reserve. So that was a great example of somebody. So it's, we'll look at the whole picture. And if we can qualify you with a lower interest rate with a different program, obviously we're going to do that for you. But if for some reason it's just not quite fitting, then the no doc makes for a nice option. There is no prepayment penalties on these loans. There's no gotchas that are going to get you. It's something that in a year from now, let's just say interest rates are a whole lot better and you have tax returns in a year from now that we can use, then you can convert that loan into a conventional loan or an FHA loan or a bank statement loan. We had a client that recently closed that is starting a business. So his bank statements for his business weren't really showing enough income yet, but he was growing and you could see the business, doing better and better, but he didn't quite have the 12 months of bank statements to qualify to show to qualify to do a bank statement loan, but this loan would be perfect for him. So he's going to get the money he needs. He did a cash out loan. He was able to pull the cash out that he needed to help grow his business. And then a year from now, when he has more bank statements for his business, he should be able to refinance it into a bank statement loan or maybe even an A-paper loan. So we'll see where the market heads. We'll see what interest rates do. We'll see, how that affects his debt ratio in the future. But these loans, they serve a purpose. Again, they're a little bit higher interest rates than a conventional loan or a bank statement loan, but for some people, you need it, and when you need it, right? And most people didn't know it was
Yeah,
around.
no
So
kidding. And what about specific credit scores? Now, what if you have a lot of cash, but you don't have a high credit score?
Then there's
Does that
things you
make
can do. There's things you can do to work with your credit to help get your credit score up where it needs to go. But I'll give you some examples. With the FICO as low as a 660, we can do these loans. So 660 kind of gets you in the door for doing the no doc program.
okay?
But if you're looking to get a larger amount of cash out, let's just say you own a property and say you have $1 million home and you're like, I need some cash to grow my business. You can do up to a $750,000 loan or 75% of the value of that property with a 720 credit score. Let's just say you were looking to purchase a home. You can put as little as 20% down. So say you had $1 million home you wanted to purchase. You could put just 20% down or 200,000 for your down payment with a 720 credit score. So part of our coaching when we speak with you and we have our consultations with our borrowers is, looking at your credit situation, what you can do to help raise your credit score. And sometimes we can start the process at a lower credit score. And then by the time we're ready to close, you can have a higher score, which will help you to get a better rate. So we'll discuss all that when you call us and we'll go over all those details.
Jackie, what about these companies that say they can raise your credit score? Do you know much about them?
Credit score companies are, they're great. We have a couple that we refer out to people if you need help with things like that. Basically, they write letters on your behalf and they submit them to the credit bureaus. There's other things that you can do that aren't as expensive than going with a credit repair company. But it's on an individual basis. I would say it just depends.
I want to read this text we just got from Miller. I don't know if that's her first name or last name. Great show. I want to know, my credit score is a lousy 502, but I have a lot of money in my bank account. Am I going to have trouble getting a home loan? I am just starting out.
With a 500 credit score, they're going to need to work on getting that credit up to at least a 660.
So the cash won't help them.
The cash won't help them. They're going to need to have a down payment. I mean, they're going to have a pretty big down payment, even with the 660.
Right.
But I mean, why is your credit score only 500? That would be the question that we would ask. And what haven't you been paying to show responsibility?
Paying their bills. They have a lot of money.
Right. Right.
Now, how do lenders determine the loan amount, say for these no-doc mortgage loans?
Loan amounts go up to $3 million. So there's plenty of room to stretch there.
Yeah, but not in California. All we hear about are these multi-million-dollar homes out there. Aren't they all like that?
Yeah, for no doc, I think 3 million is probably good enough. For your first home, you can always maybe move up. You could go up into a bank statement loan for probably 5 or 6 million are the loan limits on something like that. Step by step, right?
You just got another text. Do you handle California or just the Los Angeles area?
All over California, state of California, for these bank statement loans, no doc loans, cash flow loans we can do in almost every state now.
Oh, okay. Any restrictions on the type of properties that can be financed through these no-doc loans?
No-doc loans will do anything from 1 to 4 units. So single family residences, condominiums, 1 units, 2 units, duplexes, fourplexes, as long as it's owner occupied, or can be a second home as well.
Well, Jackie, well, these shows go so fast. First of all, let's give everybody your phone number.
The 949-600-0944 is my direct call. You can dial. You'll get me personally. Or you can go to www.talkwithjackie.com, and there's a place you can set up an appointment that works for you, and we'll give you a call back at the best time for you. I recommend you also go to our website and check us out online. You can see our reviews online. We've got over 100 5-star reviews. So that says a little bit. We try hard.
Yes. Very, Jackie, thank you so much. You're a world of information, but you communicated so well. Thanks again, Jackie Barikhan.
Appreciate it. Thanks, Steve.
Thank you. And we're going to